guys, how are you all? Welcome to this video where I'm going to tell you the 5 most important areas that you should check as a tax professional or as a chartered accountant when a client is going to undertake a transaction with overseas party. These are the most important 5 areas that you should understand from your client, and appropriately you can advise your client in a manner in which it is required to be advised, right, from the international tax perspective. But before we go on to that video, I would request you to subscribe to our channel, The Learning CA, and please also like this video if you like this entire informative content. If you subscribe to this channel and if you just press the bell icon also, it will be great for you because we keep posting such type of informative videos on this particular channel. So please do subscribe to this channel. Now, also one thing, I'm coming with a TP workshop on this Sunday where I'm going to explain what is transfer pricing to the attendees. So if you are enthusiast tax professional, if you are an ambitious tax professional, and if you wish to join that particular workshop where I'm going to direct you how you can become a transfer pricing successful and reputed transfer pricing consultant, you can join that workshop on this Sunday. The registration links are given below in this description box. Now, we come to a topic. What are the 5 most important areas that you should understand from your client when your client is going to undertake that particular transaction with overseas party? Or probably if he has already taken that transaction, then what are those particular areas that you are required to analyze? So what are those 5 areas? So the first and foremost area is the nature of transaction. So you need to understand in detail what is that particular type or nature of that transaction which your client is going to undertake. In case if it's a service transaction or transaction related to using of intangibles or transferring of some intangibles, then these are certain complex transactions which would require detailed evaluation from DTAA perspective, from international tax perspective as well, apart from import and export of goods. But apart from that, this particular transaction would require detailed evaluations from the perspective of the prevalent tax laws from the both jurisdictions. So you have to understand the nature of that transaction. That is the scope of services or scope of that particular transaction. So that is the first and foremost important point. What is the second point? The second point is terms or agreement. So in case if your client has executed any agreement with the third party or with the party with whom that particular client is going to undertake that transaction, you should also go through that particular agreement or terms which have been agreed, the payment terms, credit terms. Then in case if there's a withholding of tax, then who will bear that particular cost? So that would have been explained under the agreement. So that you should always get clarity upon. So that is the second most important point. What is the third main important point? The third point is that you need to assess whether any tax is leviable to be withheld while making payment for that particular transaction. If your client is making that payment, you need to understand from the local income tax perspective, that is the Income Tax Act perspective, whether any TDS is to be done, that is withholding of tax is to be done, or from the DTAA perspective. The DTAA is basically double taxation avoidance agreement, with which the Indian government would have undertaken, which executed with the overseas jurisdiction. So that you need to check whether any tax is to be withheld as per the DTAA or not, if it's a payment transaction. Now, if it's a receipt transaction, then you need to check from the overseas perspective that whether any TDS withholding or tax withholding is applicable from the overseas perspective or not. So that is what you need to check from the overseas perspective. And apart from that, you also need to check the DTAA, as I said earlier, that in case if there's a levy or withholding of any tax of that on that particular transaction, that you are required to understand. So that is the third and most important thing that you should check when your client comes with a transaction or when a client is undertaking a transaction with the overseas party. Now, what is the fourth and most important thing? You also need to check when it's a payment transaction, you have to check that whether the other party has its permanent establishment in India or not, because the applicability of the tax withholding will change once when if any permanent establishment of that particular entity is in India. So that is also one of the most important things. So for that also, you can again go and check the provisions under the TAA as also the local tax law, and appropriately you can take confirmation from the recipient entity that there is no P of that particular entity in India, because that is also one of the most important aspect that you should always check. And what is the fifth and most important? If the other party, the other party is also a related party of your client, then there could be transfer pricing implications on that particular transaction. So in case if that's a transaction between two related parties, out of which one party is in overseas country or even either in certain cases, in case if there are both the parties are in overseas country, then also the TP implications can be levied, can be made applicable. So I hope this entire thing clarifies. These are the 5 most important areas that you should always check when your client is going to take and transaction with the overseas entity. I hope this entire video was informative. For more such content, please do like, share, and subscribe our channel Learning CA, where you will be getting all such informative knowledge. Thank you.